Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. We're in the final seconds of today's trading day with just about 27 seconds left. And as you can see, we hit the downside target on DIA. We've hit the downside target on IWM. We hit the downside target on QQQ. We hit the downside target on SPY. And we are in the process of going up to fill the gap up here on the VIX, which, by the way, I gave a 100% guarantee that that would happen. And here we go. The markets are now officially closed on this Friday, November 15th. Welcome once again, especially to the brand new folks. If you're brand new to StickyTrades, you have to understand that I make a living forecasting the markets. We put out trade publications. We put out targets on individual stocks submitted to us by our members, and we're having a great time. So now that we've hit the downside target on DIA, where does that leave us? Well, if you look down below, you see that we have an increase in volume. When you see an increase in volume on the way down, it tells us that the sellers are still motivated. And so with that, I'm going just slightly lower for Monday and Tuesday because there is a chance we might see a bounce off of that 20-period moving average, which is right there, right around 429. So my downside forecast for next week, Monday and Tuesday only, is 431.48. Then we'll have to look for a drop in volume. Then we might actually see a pivot higher. That moving average will most likely act as a support level. And if that happens, we could now start to draw our A, B, C, D pattern. If we get the pivot higher, we could put a B, then we would expect a pivot back down from a C, which ultimately leaves us with a lower D. Remember, the A, B, C, D pattern is something that is very common and found on almost any chart. Up and down, we see that pattern. And each and every week, I give a little bit of an educational tidbit for our viewers to walk away with, so that by subscribing to our channel, and it is absolutely free here on YouTube, by subscribing, you get an education each and every week. It's like your weekly trading vitamin for those who are into swing trading. So that's DIA. If we go into IWM, as I mentioned, we've already hit the downside target. Look at the increase in volume there. I think we're going to continue lower, possibly breaking out below that 20-period moving average. So my downside target on IWM is now 226.33. Keep an eye on that, because down below, what just happened down there, we've got an official cross below that momentum line. You see that little blue bubble? It's showing a minus sign there. Well, when it drops below zero, we generally continue in that direction as the downside cross is taking place. I have a conservative target down there on IWM. We might even come all the way down to fill that gap. We'll have to see. But I'm being conservative with that downside target at 226.33 for IWM. Moving on to the Qs, which is more or less the tech sector. Not only did we hit that target, we gapped down below that target. And look at that massive volume here with the cross on the stochastic, which is a sell signal, and a cross below the zero line, which is that momentum line. Let me erase that role reversal because it's no longer support, and I'm going to make another forecast on Qs, which is going to be down here very close to that gap fill. So that is now 492.79. For our members who are long the puts on the Qs, on the diamonds, on the spiders, and on IWM, make sure you check your member page, because I put out a trade notification showing everyone how to take in the cash on those long positions that you're holding in the major market ETF. So again, downside target on the Qs of 492.79. Moving right along to SPY, you can see here again, we hit the target precisely, increase in volume again. And because of this long stretch of red, I'm only forecasting maybe another 1 or 2 days to the downside, and then we'll start to see some green show up. And so I'm going down just a little bit more on the SPY at 581.22. Now remember, we have a new service coming out that is absolutely free and offered through Zero Hedge. It's going to be the Quick Chart Tuesday. On Tuesdays, you're going to see a very short video from me, about 3 minutes long, highlighting a particular chart. Last Tuesday, it was Tesla. And guess what? Our members are doing amazingly well on this position, and anyone who actually joined in from the public, because last Tuesday, I highlighted that candle as being a bearish candle. And while I don't put downside targets on that video, I do give the pivot point and the direction in which I think the stock is going to go. So Tesla dropped almost $40 from that high after that video went out, and stay tuned because I'm going to be putting out another one on Tuesday. What a great market this is for traders. Again, if you're brand new, just learning how to trade, you don't have to jump in there with both feet. Tiptoe in. Start to paper trade. Start to learn how to read the charts. Start to learn some of the strategies, both the directional strategies and the more conservative strategies that we trade, and you'll have a great time in this market as long as you are managing risk using my 1% rule for managing risk. All right, let's move along to the VIX. You can see we had this big candle here during the course of the day. This was one big massive clump of green, and we have the oscillator starting to move up. I have my upside target on the gap fill right there at $20.20. I'm keeping that in place, but I also have a secondary target on the VIX up here at 2668. So stay tuned for that. All right, let's get to some of the geopolitical news. Remember, I use a 7-point trading checklist. I look at the type of candle, which I just did for you here on this report. I analyze the volume. I look at the stock and how it relates to the 20-period moving average. I look for gaps. Again, we just talked about that. I look at the oscillators, which are down at the stochastic, and my most favorite is the CCI. And if all of the signals are showing bullish or bearish, we can weigh the evidence and go with the way the momentum is moving. And that's how we trade, using the 7-point trading checklist. Now, I want to point a couple of things out. For those who are paying attention to the headlines, SMCI, which is super microcomputer, is now facing a Monday deadline for their filing with NASDAQ to regain the compliance. Now, here's the problem. There may be a scandal going on at SMCI, and it could actually involve the #1 market cap in the markets overall, which is NVIDIA. Now, I'm not speculating that it's going to cause legal problems for NVIDIA, but it certainly is going to cause legal problems for SMCI because it looks like there might be some fraud happening there. I'll get to that in a moment. Now, the deadline is on Monday, which is the 18th, and I found this to be very interesting, that the SEC chairman, Gary Gensler, is resigning on that very same day. Isn't that interesting? So while SMCI is going through that problem, and you got the chairman here of the SEC resigning on that very same day, possibly to remove himself for what could be a big fat mess. Looking at Mr. Mike investing here on Twitter, he has it absolutely right. He finds this to be very coincidental that he's leaving after the SMCI and NVIDIA accounting fraud is finally getting released here, and SMCI is being delisted. Now, keep this in mind, that while SMCI and NVIDIA are more or less married in a business relationship, SMCI is NVIDIA's #1 customer. So it's only a matter of time before NVIDIA starts to take a hit. Now, in part 2 of this particular report on X, NVIDIA's 10K form from February stated that they are using future expected gains into their current income forms. Okay, that could be a problem because that's exactly what Enron did back in the day, and Enron went belly up and took every one of their investors with them. And this is very similar to what we saw in Cisco back in the bubble of 2000. So you can look up this report. You can read the fine lines, especially what's highlighted here in yellow, and you can draw your own conclusions. Remember, it wasn't too long ago that I put out the red flag warning on SMCI. And let me give you a little taste of what that looked like on our live seminar. This is exactly what went out. Here we go.
All right, how about this waterfall? SMCI for Fred V, please.
Yes, another one comes up every single week, but it's a
Oh,
10-for-1 stock split. So this will be the last time until we hit a target on this one. But that downside target is 35.78, 35.78.
but that was a gutsy call you made. I mean, that was a big call and it's going your way. So don't
That was a big one. I mean, it doesn't look like much because remember that I started talking about that before the split. You know, it was $400 or actually close to over $500 when we started talking about that. And it just, when you look at the daily, I could talk about this a little bit more. When you look at the weekly, this is not good. This is not good for this stock. And the reason I stopped it there, if you remember, is because of this role reversal. So it's most likely going to hit that and then maybe bounce. That's why I stopped it shy of that. So once we get a really strong pivot, then we could start talking about possible higher prices here. But it's got to get out of its own way, and that weekly chart is not looking good. And so SMCI takes the hit. They're now down 85% with the likelihood that it could actually drop 100% from those highs if they go bankrupt. We'll have to see. But folks, you have to understand that if you focus on the charts and you use a trading checklist and you keep your opinions out and you trade a strategy that's conservative and you find ways to take money from the market, then this is going to be a very fun place for you to learn and trade over time. Last week, I talked about all the credits that we took in from our option rollout. Well, here's the totals right now with a little bit of an explanation. When I talk, sometimes I don't realize that there are very basic option traders that have no idea what I'm talking about. But this month, we took in a total of $50 in credits. That works out to be $5,000 for every option or $50,000 for every 10 option contracts traded. For those members of ours who are trading 10 contracts at a time, this month they took in $50,000 on this total position. Last month, they took in $38,000. That's what that $38.55 represents. And so each and every week, and most of the time each and every month, we are rolling our positions for credits, and we're taking money from the market to pay off other existing positions. And as I've said before, most of our positions are positive delta. And we have the longer term positions that we see in spiders, Qs, IWM, and diamonds are the longer term bearish positions. So hopefully that'll help you understand how we're trading and how we're positioning for the short term and also for the long term. Right now, our neutral position, which is in Restoration Hardware, is the big money maker for us because that's turning into a cash cow. A cash cow is when we use the market's money to pay down the position in the long that we're holding to zero. And once we do that, there is now zero risk on the position. And we use these credits like we're going to the market's ATM machine to take out money every month. That's how we trade. We're using neutral strategies. We're using positive or bullish strategies. We're also incorporating and mixing it up with some bearish or negative delta strategies. So that's how we are trading. Thank you so much for joining us here today. If you like what you're seeing, then please give us a thumbs up, like it, share it, comment on it, and of course, hit that notification bell so that you get my alerts. Remember, next Tuesday, I'm putting out the next quick chart through Zero Hedge. If you click on that notification bell at the very top, you will actually get my video before it hits 100 million eyes on Zero Hedge. So connect the dots. If you're the first one to take a look, and maybe even the first one to make the trade, then you're going to be at the head of the line, and it could be a good experience for you. I'm not going to give you any guarantees here. I'm not giving trade recommendations. I'm just telling you like it is. We're having a great time here in this market. Thank you again for joining us, and have a great weekend. We'll talk to you next week. So long.